EV stocks like Lucid and Rivian have been under pressure since 2022 when investor enthusiasm in EV stocks really fell following the decreasing demand for electric vehicles by consumers. Now that valuations are back down to more normal levels, investors are starting to kick the tires of these EV stocks and ask which one is the better investment for long term buyers, Lucid or Rivian? I'm going to answer that question in this video by putting the two EV companies in a head to head comparison on several important categories, including revenue, profit margin, cash flow, valuation, and the prospects looking ahead as far as different models coming out and different strategic challenges facing the EV industry. So let's compare these two and answer which one is the better buy. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So looking at the revenue history of these two companies, you'll notice that Rivian got off to a better start here than Lucid, but in recent quarters, Lucid's growth has been better than Rivian. Rivian's growth is going backwards now, and 2024 has been a forgettable year for the company. Well, not demonstrating any growth year over year in terms of unit increases or revenue increases, when the company was forecasting a significant increase in growth by this point. Its revenue decreased to $4.551 billion on a trailing 12-month basis. That's down from around $5.5 billion in earlier the year. Lucid, meanwhile, increased slightly to trailing 12-month revenues of $730 million. Now, looking ahead to 2025, Lucid has better prospects. They recently introduced the SUV, which is in higher demand. Worldwide, SUVs are more highly desired than sedans. Up until this point, Lucid only had a luxury sedan for sale. Now it introduced the SUV, which looks incredible, by the way. It's out of all of these electric vehicles in the market, Lucids are my favorite in terms of the way they look. I think they're the best looking electric vehicles in the market. Rivian doesn't come close for me. I know it just depends on taste, but Lucid just looks so much nicer. And the SUV, the Gravity, I saw the presentation. It's a beautiful car, and they're starting with the $90,000 model. The year after, or a few months after, maybe they're hoping to have the $80,000 model. It's going to compete directly with Rivian's SUVs, and undoubtedly, Lucid is going to take market share. Just depends how much. How many people are going to choose Lucid's SUVs instead of Rivian's next year remains to be seen, but it's going to be a non-zero number. So that's going to increase Lucid's market share in the category, and I wouldn't be surprised if it doubles Lucid's sales next year because, like I mentioned, SUVs are more desired than sedans, and so Lucid, it's just a matter of can they produce enough at the right price points to attract more consumers buying these vehicles. For Rivian, they don't have any new models coming out next year. They do have a new variant, the more powerful, more expensive model coming out for Rivian, and they are excited about that one because they need to drive higher average selling prices in order to reach their goal of being gross profit margin positive for next fiscal year. That's what Rivian is looking forward to in 2025. Rivian's lower priced models are not scheduled to come out until 2026, when they will introduce a lower priced SUV. They're targeting the $45,000 price point. Remains to be seen if they can hit that price point, or if they'll need to sell it at a higher price or accept more losses on the bottom line, which I'll talk about a little bit more. They're becoming less tolerant of these losses on the bottom line. Speaking of those losses, let's compare these two on operating income on a trailing 12-month period. Rivian lost a whopping $5.6 billion in the trailing 12-month period, and Lucid also lost a massive sum, $3 billion in the most recent trailing 12-month period. If we compare this to revenue, Lucid's losses are more than 4 times its revenue, whereas Rivian's losses are a little more than 1 times its revenue at 5.6 billion. So compared to revenue, Lucid's losses are much more uh, profound. Although many of those spendings were on research and development to introduce this new model. And if sales do increase as much as Lucid expects, those losses on the bottom line could shrink next year, although that's a big question mark as well. Similar story with cash flow from operations, almost $2 billion in negatives for Lucid and over $4 billion in negatives for Rivian, with modest improvements, right? The biggest losses came at about the middle of July 2023, where they were losing over $5 billion on a trailing 12-month period. Now it's closer to $4 billion, so about a 20% improvement, which is not as quick as you would like to see when your losses are in this magnitude, right? A 20% improvement would be nice if you're already positive and already generating 50, 60 billion dollars in cash flow. But when you're negative and you're improving, when you're negative 5 billion and you're only improving by 20%, and this goes for both Rivian and Lucid here, those improvements are not quick enough to stop this bleeding on the bottom line. They've built up a similar amount of long-term assets, and I look at this to get a proxy of their manufacturing base. This is mostly in manufacturing assets. They have about $4 billion worth, and this is not including depreciation. So this is already depreciated assets. So this is net total long-term assets. And Rivian has capacity for over 200,000 units, and they have the additional facility that's yet to come online. Lucid also has significant capacity for manufacturing. Both Rivian and Lucid have way more manufacturing capacity than they need. Their sales are only a fraction of the manufacturing capacity that they have. So their sales could double and then double again, and they would still have room for manufacturing capacity. These companies were built on the expectations that sales would be maybe 5, 10 times higher than they actually are today. So they've got a lot of room to grow into, which is good and bad, right? The bad is that, they spent all this money and they could have spent a lot less to make the existing sales and have less overhead. But at the same time, investors can look at it in another way, thinking, well, if they are able to ignite growth, then they can grow, double and double again. They can quadruple their revenues and not have to spend money on manufacturing expansions because they have the necessity, they have the required manufacturing capacity to grow into those. So it depends on how you want to look at it. Speaking of the losses, if you look at retained earnings, how much money these companies have lost on the bottom line in the last 5 years, Rivian has lost over $22 billion cumulatively in the last 5 years. And Lucid has lost over $12.5 billion cumulatively over the last 5 years. So Rivian has been losing money at an accelerated rate, while Lucid hasn't been so aggressive in their growth ambitions, so they haven't lost as much money as Rivian has. So which one do I think is the better investment? Let's look at the valuation. Lucid is trading at a forward price to sales of 3.8. Rivian trading at a price to sales forward of 2.4. While they are both losing money and growth is challenged, Rivian is closer to profitability. They're forecasting fourth quarter gross margin positive and 2025 gross margin positive as well. Their recent strategic investments from VW will give the company the capital to get to the next stage where they announce their lower priced models. Lucid, I'm excited for their SUV coming out, the Gravity. However, they're still longer ways away from reaching profitability, and the stock is more expensive. And I didn't see very much evidence to justify a higher valuation for Lucid. Therefore, if I had to pick between these two EV stocks, I would pick Rivian. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.